So, Mr. Gagnon gave us a whole bunch of really great information about the MOU. I'm not a university professor, I'm a university student. I'm in my 4th year of a business degree. As soon as I found out that NB Power was up for sale, I started going through 10 years of financial documents from NB Power to find out what was really going on, because this worries me. And the information that I'm going to present to you tonight, it's quite simple. It's math, it's pretty simple, have it all laid out. And I want to let you know that this information is different than the information you've been given by your government. The information that I'm going to give to you, the numbers that I'm going to give to you, came from David Hay, the president of NB Power. So if we're going to trust numbers, are we going to trust them from the government that is spending $1 million to sell us this idea, or are we going to trust them from the head of the corporation who actually knows what the financial health of that corporation is? Personally, I trust David Hay's information. That's what I'm going to share with you. So, Shawn Graham has been claiming that the people who are opposed to this sale are doing so for emotional reasons. So, let's take a non-emotional, factual look at the proposed sale. I already did this. First of all, let's look at selling a house. I'm going to equate this to selling a house. Let's say that you find a house and the purchase price is $1 million. So you go out and get a mortgage. And you spend years and years and years, and you pay down $500,000 of the price of that house. $1 million minus $500,000 is $500,000 left in debt. So you have $500,000 in equity in your house that you own, and $500,000 in debt. You could split the house in half, but that would make it useless. But that's basically what we're talking about. The house is still worth $1 million. So, the question is, would you sell the $1 million house for $500,000 just to get rid of $500,000 in debt hanging over your head? Of course not. Because you lose that $500,000 in equity that you've spent years and years and years paying off. And then you have nowhere to live. According to the government, NB Power's assets are worth about $4.6 billion. This is what I've seen in the media. And it's not true. I don't know, I'm not calling anyone a liar, I'm saying that the information is wrong. NB Power's assets are really worth between $11 billion and $13 billion. This is information from David Hay. So I'm going to pick the middle of the road and say $12 billion, just to make the math easy. Does it make sense to sell assets worth about $12 billion for $4.75 billion just to get rid of debt? And the debt is about $3.8 billion. Does it make sense to sell something worth $12 billion for less than $5 billion? That makes as much sense as selling a $1 million house for $500,000 just to get rid of $500,000 in debt. Selling a business is a little bit different than just selling a house. And the reason for this, let's take an accounting business. Probably rents an office or leases an office, maybe has a few computers, doesn't have that much in terms of assets, but it has a client list. That client list gives the accountant the ability to make money year after year after year as those clients continually come back for the service. The income potential needs to be examined when you're talking about selling a business, not just the asset. So when selling a business, we look at the worth of the business is the assets that it holds plus the income potential of those assets to generate money. And we usually look at the income potential over multiple years because a business is not just going to generate money for 1 year. As we heard from Mr. Gagnon, Hydro-Quebec is planning to make money on this sale in the first year. So we should be looking at much longer than that for income potential. Imagine that you own a rental property. It's a house, and it has 4 rental units. And let's say that the net worth of the house is $200,000. And the 4 rental units are bringing you in at about $500 a month. So, what you're getting is $2,000 a month in income. And that translates to $24,000 a year. To properly value this business, let's take a look at the income potential over 10 years. With a house, you're going to have to do repairs and stuff, much like you would have to do repairs with NV Power. So let's look at how much this house is worth over 10 years. The income for 1 year is $24,000. Multiply that by 10, $240,000. So the total value of the business, if you're looking at a 10-year time span, is $440,000. That's a lot more than the original $200,000 that the house would look like it's worth on paper because it has income potential. The real worth of NV Power. So we've already established that NV Power's assets, which are the power plants, the transmission lines, the properties that it owns, the buildings, are worth about $12 billion. We need to add the income potential to the value of that business. On the books, last year, NV Power showed $80 million in profit after all deductions. Okay, now this is not strictly true. People will look at that, look at those financial statements. I was looking at the financial statements. I had to dig through to find out where the money's going. People will look at that and say $80 million is not a lot of profit, especially when it's got $3.8 billion in debt. It's not the whole story. When you look at the profits of a company, you take the revenue coming in and you subtract the expenses. And you get the total money that the company's making before tax. NV Power last year made $700 million before tax. Revenue less expenses. $700 million. Now, if we want to talk about just strictly paying down the debt for a second, $700 million, you could pay off the debt of NV Power, $3.8 billion, in 6 years. Very profitable company. That's why Quebec wants to buy it. Where's the money going? So this $80 million is left on the books because you need to have cash to operate a business. You need to have cash in case things come up. You need cash flow. So they keep that $80 million as like operating cash flow. Take that off of the $700 million and there's $620 million that's unaccounted for. $200 million last year went to pay down the debt. And that's good. That's what a healthy business does. The debt that we have is financed with profitable assets, so you use the income from those profitable assets to pay down the debt, and over time the debt gets paid off and you're free and clear. You have assets that are making money and bringing money into the province so that our rates can not only be frozen but go down. So $200 million. That leaves $420 million extra. That money went from NV Power's piggy bank into the government's coffers for use in the public slush fund. This whole thing started with McKenna. He took $20 million the first year he did this. And ever since, every successive government, every successive year, it's been going up and up and up. Now, on the financial books, if you go look at them, because they're public documents except for this past year, they want to keep that hush-hush, but they're online. You can go look at them, but you won't see a big chunk that says $420 million. The reason is that they take a bit here and a bit there and a bit there, and they give it to different things. They say dividend payment, they say finance charge for the electric finance company, they say this, they say that, they say the other thing, and it's all little chunks, but it's all going to the same place under different names. And if you add it all up, a lot of the money that NV Power is making is going directly to the government. What does this mean?